Market Chameleons and my main chameleon, Dimitri Pargamonic. How you doing, Dima?
Good morning, Will. How are you?
Another day of Q&A. Is that what we're going to go through today?
Yeah, I think so. I still have some questions I jotted down, and I do get some questions coming in through email, through chat. So I think I'm going to take some of these questions and start answering them. And of course, yesterday we had a couple of brave people raise their hands and come on and ask a question live, so with audio. And if you're not comfortable with that, you could just you want to ask a question, you could put it in the chat. But I think we'll do one more day with Q&A, see how that goes.
Yeah, and we'll carry the live. I mean, people can ask questions all the time, so we'll always put the link up so you can come in live. It seems to be, people did enjoy it. We actually had a couple emails about thanking Jean. Actually, she was the one who stayed on the longest for a question about the puts and SPY. So anyways, I put the link in the YouTube chat. You have to come over to the Zoom and then raise your hand, and I will let you in if you have any questions. With that, let's get to the disclaimer. What do you think, D?
Yep. So before we get started, keep in mind, everyone, Will and I, Market Chameleon, we're not registered investment advisors. We're not broker dealers. We're not telling you what to do. We're just sharing ideas. If you need professional help, call your broker. That's what they're there for, to help answer your questions and provide you with guidance. There's the disclaimer.
Excellent.
So then let me share my screen real quick. And I think what we'll do is, how does it work? Well, if somebody wants to ask a question, they could do that through where, like a Zoom, or how would they?
Yeah, they have to click the Zoom link that is in the YouTube chat, come over to the Zoom meeting, and then on the Zoom meeting, there'll be a functionality that they'll see next to at the bottom where they can raise their hand. Once they raise their hand, I can let them in and they can ask their question.
Okay. Yeah, so that's a different way of doing it this way. Sometimes people have a question and it's better asked, verbally than just writing it out in the chat. So we're going to try that. I think it was pretty cool yesterday, and 2 people came on. So we'll see if anybody has any questions today. If you want to put them in the chat, that's okay too.
Yep.
So let's get started with the pre-market report, and any questions that I kind of had during the week, like go through email or through chat, I made notes of that I think maybe other people might have the same question. So I'll just kind of, answer those and see where that leads us. So here we'll start out as usual with the pre-market report. These are stocks trading in the pre-market hours. We have the most active stocks, biggest percentage gainers, biggest percentage decliners. I'm going to come down here real quick and just take a look how many made the percentage gainers list. We got 42 stocks that made that list, 47 on the percentage decliners list. So from market breadth wise, pretty neutral at the open. I'm going to use this filter, market cap, and look for what's going on in the higher market cap stocks. So let's do 20 billion or higher. And here we see 5 made the percentage gainers list, 10 on the percentage decliners list. So from that perspective, slightly bearish at the open, but these lists are pretty small. 5 on one list, 10 on the other, not very big. There are some questions that kind of pop up on the pre-market, and I think there's one here on the block trades. So we have these 3 different tabs here. Summary, you could go to screener and use your own filters to screen out for different types of pre-market movers. And I'm going to hop out from here. Unless there are questions, I could hop back in. But this way, instead of having a general, report, most active, biggest percentage gainers, biggest percentage decliners, you could filter these reports out yourself using your own filters based on price moves, volume, relative volume, news, float of the shares, all that stuff. You could kind of do it from here. The question I got, though, was on the block trades. And these are big block trades that are happening in the pre-market. So you have different types of trades. You could have small trades, that maybe 100 shares, 200 shares, but you could also have a big block trade, which we define as a notional value of $200,000 or more, or 10,000 shares or more in a single transaction. So those we consider block trades. And the question was, this here is the list of the block trades. And you could see here, they're happening in a pre-market, and they could be happening on different venues. This happened in a dark pool. This happened on a NASDAQ. This one was a sweep. This one was a regular pre-market trade. And the pre-markets usually happen before 9:30, right? So that's what we consider pre-market. After 9:30, that's when the regular markets open and trading begins. So one question was about an opening cross that happened after 9:30. So how come we had on a pre-market screener, we had an opening cross that happened like something like at 11 or 10:30? How's that possible? So because right now we're still, today we didn't hit 9:30 yet. I'm going to go to the previous day and show you kind of what the question was. So June 21st, this is yesterday's pre-market activity. So we see here BITF, there's a trade at 11:25 a.m. So way after 9:30, right? So here's another one, 9:34, 9:33. So what gives? In the pre-market, in the pre-market report, we include the opening crossing trade. So when a stock officially opens on the listing exchange, they're going to have an opening cross. And what that does is it matches up the limit order book of, the trades that are supposed to be executed during the opening, and they match up the bids and the offers and come up with a price that they cross everybody and does it in a single transaction. So this is kind of like an auction-based opening cross. And then you have regular trading starting, where you got then people quoting on different exchanges, and then you got Reg NMS rules kicking in with the trade through rules. But the opening cross is basically where the specialist of that exchange takes the order book that queues up in the morning, that's not trading in the pre-market, but they want to trade it in the regular market, and then they cross all the shares. So here, why in BITF, the opening cross was 11:25. So here, I'm not expecting any trades during regular hours before 11:25 a.m. So I'm going to go here to BITF and just show you guys over here, BITF. This is what it looks like yesterday in the morning. So you could see here the first trade, 11:25, and that's when it started trading regular hours. So that specialist didn't open up that stock for trading until 11:25. Sometimes if you have a big imbalance, the specialist is trying to find the other side as well to figure out what price do they open it up, what's the fair value price to open up that stock. Okay, so the opening cross doesn't have to be necessarily at 9:30. Sometimes it will come after 9:30, and sometimes it could come very far after 9:30 if there's a really huge imbalance and they're trying to figure out a fair price and trying to get the other side. So hopefully that makes sense, that there's an opening price by the exchange that sets the initial price, and then and then the regular hours start. Pre-market before 9:30, these are just happening in the pre-market, and then you could just come. I think I have it here. Let me see. You would have to go before 9:30, right? Go back there. Let me just go back before 9:30. So these are all opening crosses here. And by the way, some people, they use this opening cross as also a type of signal to see if there's a big cross, what happens afterwards. Because if you got, so I'm not going to go all the way back, but anything before 9:30 will have a pre-market.
Hey, D, we did get a question. Someone hopped on late and they were just asking, please, I mean, if this is the pre-market screener, you got to this page, right?
Yeah.
They're asking how you got to the page.
Yeah, so I started out the pre-market report, and you have 3 different tabs up here: the screener, and then the block trades. And that's where I came to, the block trades. And, I just went back to yesterday. And let me see here. I have the opening. So here's the opening, right? The opening part. Here's pre-market trades. Here's opening. So I'm going to just select the opening trades here and just kind of show you. I'm going to sort by biggest. So we could see here Amazon had a trade. The opening cross was 38,000 shares, which represented $133 million worth of stock. NVIDIA, 147,000 shares crossed at the open for a value of 108.9 million. So this could be, for these stocks, that might not be that unusual because these stocks trade a lot and that's not a big number. But, if you're doing this every day and you're following certain stocks, you might notice something like, well, that's kind of unusual, in whatever stock, Disney to have an opening cross of 500 million shares. So that's something you might want to take a look at. Why did somebody either take on a big position or get rid of a big position right at the opening? But that's how I got to it. Let me see. Is there a question, Will, flashing or no?
Well, we did have a question earlier, which I was going to get when you were done with this. Let me see. We have a lot of people in the chat today. Okay. Albert was asking, is there a way to know the expected options decay, call or put, net as we get closer to option expiration?
So when the expected decay in an option, is that the question?
Correct. Yeah.
So I'll go and kind of just show you in SPY, right? So I'll go to the options chain, and when we use the option pricing model, like the option pricing model, you could also calculate what's called Greeks, and Greeks kind of tell you the different risks of an option. And one of them is theta, right? So theta is the expected decay right here. So I'm on the options chain, I have delta, I have gamma, vega, and theta risk. So theta is the expected decay in this option, okay? So I'm going to just do the 423 call. So this is SPY, July 6, 10 days to go, okay? 423 call. It's $2.65, $2.68 as of yesterday's close. So if nothing changes, meaning the implied volatility stays the same, right? Because if the implied volatility changes, everything else changes. It's dynamic. If the stock price changes, it's derivative. Everything is dynamic. This option could go more in the money, more out of the money. Everything starts to change. But if we freeze it and change nothing, right, and say everything exactly looks the same at the end of the day, how much is this option expected to decay based on the days to expiration changing? That's what your theta is telling you. So what this is saying is that this option is expected to decay by 12 cents, right, by the end of the day, assuming implied volatility is the same, the stock price is at the same price. Now the theta is also dynamic, so that doesn't mean every day it decays by 12 cents. It's saying today that's what it's expected. As you get closer to expiration, the model, something in the model change, and that decay will change. Will probably even be higher. Okay, so that's how the expected decay in the option based on the option pricing model is calculated. Does that make sense to people?
Yeah, that was super helpful, B. Thank you.
Yep. So for example, if I'll just click on it, let's just say you buy that option. I think I have a theta in here. I'm going to load the strategy. So here, this is the option. This is its payoff. Okay. Here's the payoff of the option. Here we have, if you bought it for 268, this is your delta risk, meaning that your delta is what is the option expected to change by for dollar change in the stock price. If the stock price goes up, this option is expected to gain 41.5 cents. If the stock price goes down by $1, this option is expected to lose 41.5 cents. Then the whole formula changes. It's only for $1 move, then you got to recalculate it. Here's your theta. So here the theta is saying that today this option will lose 12.3 cents. So if you want to just kind of see, well, what if nothing changes by June 28th, or how does this look June 28th? You could run a diagram, and this is the diagram showing you the payoff of this option based on theta. Okay.
Perfect.
So if you want to do it day to day, like that. Okay. So that's a different way to check it.
Great.
Yep. Was that it?
Yep.
The question. So I think I did 2 questions yesterday about when open interest updates. We talked about what do we consider high open interest. So we took a look at that based on a relative value. I got a question about option order flow sentiment. And one of the questions is, well, if the option order flow sentiment is bullish, all right, why does the stock go down the next day? Okay, so I think then I have to explain what option order flow sentiment is, because then what you're thinking about it, then he must have been thinking about it in the wrong way. So an option order flow sentiment is a way to gauge how people or traders might be feeling about a stock right now based on the way they're placing their option trades. So think of it, I'm going to just use maybe Apple as an example. I'll go to order sentiment. So before I describe these, let me just explain what this means. Let's say when we look at a stock, right, and Apple stock was up yesterday. So what is this telling us? It's telling us that whatever news different traders are consuming yesterday, there are more buyers than sellers because they're feeling more bullish. They're pushing the price of the stock higher. So in the stock, it's much easier to see. The Fed says we're not going to raise interest rates. The market's up. That day, people perceive that that's bullish. That's more bullish for whatever the Fed said. Right. So any type of news, how are people reacting to it? And sometimes you could do, like, let's say not in a stock, but let's say a politician, right? Let's say a politician last month raised $1 million for his campaign. Then he comes out, says, like, I plan to do this, I plan to do that. The next month, he raises $2 million. Well, whatever he said, those people, increased amount of money they're donating, so they're reacting positively to whatever he was saying, right? He or she. So that's gauging the sentiment, right? The sentiment of people following either politician or following the stock. But in options, it's not that clear through the trading because it's a derivative. So if you have no trades in an option, absolutely like zero trades in an option, and the stock moves up, well, the call prices, the bids and offers will move up because it's a derivative of the stock, and the puts will move down because they have a delta, right? So, and that's without any trades. So what we try to do is say, well, what about the trades going on? Like, how are people reacting to the different information out there? Are they acting in a more bullish manner or bearish manner? And options are even more complicated than that because you might have noisy trades like a straddle. Straddle is not a direction. It's more of a volatility play. If you're buying a call and buying a put, you don't care if it goes up or down. It just has to move by a lot, right? Or if you're doing a strangle. So there are all these different things going on in the options. And how do we filter out just to get a sense of, well, how are people feeling about the stock given the different information that's always going on and all the research they're doing? How are they feeling about the stock? So that's what the option order flow sentiment is trying to do. It doesn't know what tomorrow's price is going to be or next week's, right? That we have no way of knowing because that didn't happen yet. So we don't know what tomorrow's price will be until tomorrow. But what we could do is take a look at, well, how do the options traders feeling about today? How are they feeling about the information today? Does that make sense to people? And let me know if you have questions. So how do we do that? We kind of have to isolate the most meaningful trades that we think are based on a directional play. All right. So if we see that something has multi-legs or it's part of a hedge or it's part of a stock trade, those are noisy. We have no idea what's going on there. So we filter out those trades and say, we're going to put those aside because we don't know what the real intent is. We can't even infer it. But what we can see is, what about single-legged trades, right? Just straight call or put. So it's like a regular trade, intermarket sweep, auto execution that doesn't have any kind of other trade tied to it. And what we want to do is say, well, how many of those were calls? How many of those were puts? All right. So we're going to first isolate that, the single-legged trades. And the other thing we want to do is say, well, isolate further the trades that we think are happening on the buy side. So let me just show you here. These are the trades. So here are the trades we're isolating. Here's puts, calls. This is the price of the trade, the quantity, and this is the market at the time. So the market at the time, 58.35, 58.65. So this was a put purchase. You could see this looks like a call purchase happened on this. The price was 54.10. The bid was 54. The offer was 54.10 at the time. So whatever this incoming order was, we infer it's a purchase. So that's what we do. We isolate call, puts, single-legged, and the ones that we think are incoming purchase orders. So why do we only do purchase orders as not sell orders? So somebody will ask, well, if you sell a put, that's bullish. You have a long delta. And that is true, but it's not as strong as a signal or commitment that a stock is going up as buying a call. So let me explain. If I sell a put, let's say now to the money put, really, my opinion is that as long as the stock sits there and I collect that premium, I'm good, right? I don't really want this. I just want the implied volatility come down and that option to decay and the stock to really go nowhere. If I sell an out of the money put, I just don't want it to crash. But the stock sitting there is fine with me. And if I think that the stock is going to go to the moon, right? Like if the stock is $80 right now, and I think it's going to go to 200, well, I wouldn't sell a put, an at the money put for $2. I'd probably buy that at the money call. So when you're buying an option, it's a stronger signal, your commitment to a directional bet, because if that stock doesn't move within the period before expiration, and it doesn't move in the direction you need it to move by enough, you're going to lose that money, right? So you're actually sending the strongest signal that you're bullish by buying a call premium, by buying premium. When you're selling premium, it's not exactly the same way. It's not as a strong signal. Maybe you're bullish, but you're more neutral. So buying an option is the strongest signal you could give on a direction, because the stock has to move. It has to move by enough to cover that premium, and it has to move in within the time frame of the expiration. Okay, so what we do is we try to isolate all the call purchases, and we try to isolate all the put purchases, and then we create a benchmark. And here's a 30-day benchmark, an average for Apple. So we could see here in Apple, on average, 37.7 million calls, $37.7 million worth of calls are purchased on an average day versus 17.5 million worth of puts. And then we could kind of compare, well, how has it been doing in the last 5 days? How has it been doing recently? And if we're seeing this increasing from the benchmark, that's kind of saying that the order flow coming in is increasing in a bullish manner, right? So we got, as a percentage of just the call purchases versus purchases, the call purchases is starting to exceed proportionally the put purchases, and the amount is going higher. So again, it's only telling you how the order sentiment, how people may be feeling about the stock today based on the option order flow. And why the options, why would we want to look at the options? And when we have the stock, when people buy a stock, all right, the horizon is forever. It doesn't need to go up in a week, 2 weeks. People are buying stocks in their pensions, in their mutual funds. There's always natural order flow coming in there. When people are buying options, they must remember, they have to be correct by the amount of the move and the timing of the move. So, or because if you're buying an option that expires in 2 weeks, and the stock sits there for 2 weeks, and week 3 it moves higher, you lost that premium. So that's why we kind of want to see, what are the people who are more short-term in nature, what are they looking at, and how are they feeling? Is that, hopefully that clears up that question. Let me know if you have any follow-up.
Yeah, no, people are super helpful. Brad did ask, he's asking your opinion. He's asking, can you talk about signal strength, which you've been talking about? So I don't know if the question's been answered, Brad.
Yes.
Said, can you talk about signal strength and where the thresholds are in your opinion? So I guess he's asking.
I might have to continue this tomorrow because I got 2 minutes left. But basically, we created, for the signal, we chopped it up into what we believe are 3 different kind of, I'm sorry, not 3. I think it's, let me see if I could do it here.
Well, listen, this is a good place to end it. We'll continue tomorrow. We did also, I'll copy the questions because Robert asked something. He wants to screen for implied volatilities that are rising or falling in stocks. So there's 2 questions. We could have a question and answer tomorrow. And it would be great if some people came on and did it live as well. We are right up against the opening bell. Is that good?
Yep. So yeah, we'll just continue on that discussion tomorrow.
Hey, great job, D. They love this question and answer. Chameleons, tomorrow, let's get on and we can have you verbally if you come over to the Zoom meeting. I'll put the link in tomorrow. D, great job as always. Thanks, buddy.
All right. Thanks everyone for joining. Stay safe out there. Have a good trading day, and we hope to see you tomorrow.
Trade in peace, Chameleon.